Happy Monday, traders. It's 8:01 a.m. Chicago time on the 10th of January, 2022. This is episode number 2148. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment. It was mild risk off, now more risk off. We haven't crossed the 1% mark across the board, just in the NASDAQ. The NASDAQ is really weak in the pre-market heat map. We're seeing, well, let me show it to you. This is the S&P 500 pre-market, and you can see that the techs are getting hammered, and not hammered, but they're losing some. It's not like they're down 5%, but you can see that the green is with the people that control the green, the banks, financial institutions. Those are higher. The market is reacting to jitters with regards to yields. Let me get this back to where it belongs so I can keep my information organized for trading. Hello. There we go. And so overall, the market's a little bit nervous. What's going on here? Market's a little bit nervous. We're seeing the S&P off 31 points. We're opening below Friday's range. We did finish Friday relatively weakish. We had an excess high in the S&P on Friday. Pre-market commercial metals is the only key company that's reporting. They beat their estimates by 33%. Commercial metals, given how that commodities have been performing in terms of cost as an input cost, it doesn't surprise. The big news today is GS is expecting, Goldman Sachs is expecting 4 rate hikes instead of 3 in 2022. And then we also had Fed's Barkin come out and says that the March rate rise is conceivable, supports the December shift towards a more hawkish stance. Supply chain pressures may persist into next year. Upward inflation pressures may abate late this year. The yield, I'm looking at the 10-year, and it has taken a turn and is pushing lower. And so are the bonds, and we'll do our overview here in a minute. But in general, the market's nervous about a few things. Japan also has extended its COVID-19 entry ban. They're just simply are keeping their borders closed. That came across at 6:26 Chicago time, and the sweep down in the S&P occurred at about 6:30. So I'm not sure what's driving this thing. I don't know what the SOC is or anything like that, but it looks like a bunch of nervous ninnies this morning in terms of positioning. We do overnight nothing major. We did get the unemployment rate out of the Eurozone, 7.2% in line. Unemployment rate out of Italy, 9.2%, just 10 basis points better than the 9.3 expected. We do get wholesale inventories, and then we get Fed's Bostic. Nothing really big this morning. Looking at the S&P is in a multi-distribution profile. Really, the S&P opened and dropped right away. I watched this occur. Dropped right away, and it went right to the key level in this area, which is 46.50. So 46.55 is one that I talked about on Friday, if you have watched that video, and that happened to be the low on Friday. That's a key low volume node in the area, but below it is this 46.50. And if you go back to the middle of December 15th to be exact, you'll find that the 46.50 formed a massive ledge. There was a huge ice there. I think it was like 10,000 on the first go, and an additional 15,000 traded at that one price on the second go. It was just Basically, it was just a wall, and we just cleared it. And that's it held up overnight at 46.50. We took a bounce all the way to 46.81.75. That's the high overnight, which brought us back through the prior point of control from Friday, and it's just been swinging quite widely. After it made the high at 81.75, it just immediately dropped to 56, which is, do the math, it's 25 points, and it pretty quick, and then it swept back up to 75, and then it now dropped through that 50 with a nice big sweep there, lots of stops below the 50, taking it down to 46.33. The overnight point of control shifted down to 46.39. Again, we're opening below Friday's range. We're opening in out of range, and gap rules apply here this morning to the short side. So this could be a very, very interesting trade today. Very interesting trade today. Crypto's still losing ground. Let me shut this off for a second. Still losing ground and pulling back. Not seeing this as a pretty standard correction in crypto terms. You know, dropping 6% in a day, or even 10 or 15%, is not a huge deal. So not seeing this as a disaster. But if you recall, my prediction, or my expectation, not prediction, it's really not a prediction. Hate using that word. I can't predict what the market will do, but the plan, I do have a plan. The plan, however, is that if it doesn't hold the support that I talked about several times, it is likely to go to 36, and I believe it's still on its way to 36. It'll probably Bitcoin will find support at 40, and once it clears that major figure, 36 is on deck, and that's where things will start to consolidate and chop around and so on. That's what's expected. The S&P, 264,000 contracts, very wide range. The S&P has already taken out our expected range for the day of 45 and a quarter. Expected range for the session at 45 and a quarter points. It's at 48.75. It's well above the overnight expected range of 33.75. Well, the expected is 23.5, but the one standard deviation is about 34 points, and it's already taken that. So the S&P has come a long way, but it's on the sell side. So this has a lot of ability to keep pushing and expanding that range. So we're completely playing outside of what we accepted Friday as balance, and the range Friday did a good job of establishing 46.87 down to the settlement, which was 46.67. So 87 to 67 were the accepted ranges on Friday, and we are well below that. Any pushback into Friday's range would target 67, 68 before the point of control. So it should be, I expect it to be a pretty active session, which is actually interesting because the Monday after non-farm payrolls tends to be relatively choppy. So that's that. Let's take a look at what the market has done. The first thing I want to start with here is the composite. Last week put in a higher high. So you can see the week before, the last week of the year, of course, it's you know, we made an all-time high of 47.9975 in the RTH. We had a higher high in the extended trading hours for 48.07 quarter, something like that. So we had pretty tight range, relatively low volume at 3.44 million. Last week we took out the all-time high, but then immediately turned around and pushed lower. I've talked about this high here being relatively being put in relatively poorly by the buyers. They just did not have any power above the 4,800. So the expectation is it would advertise prices lower and bring in more buying interest. And it's still struggling to do so. It's still struggling to do so. So we ended up last week with a very distinct double distribution profile, my favorite kind of profile. It's a profile that shows us very clearly what the participants' intentions are, and it gives us very clear risk reward in terms of positioning. And so we ended up closing in the lower distribution. We didn't shift the point of control down from 4780 down to about 4700s where it was expected to go. Did not shift it, and we finished Friday moving away. So Thursday we opened, tested down, tested up, and ended up back at this black line. Who knows? Who can guess what that black line is? I'm sure most of you know what that black line is. Please tell me you know. Been talking about these for the last 12 years, this concept. But, you know, we finished Thursday on the black line, very, very important line. And then on Friday, we opened, we checked up, and then we dropped through and we went right. We finished, we pushed into the 50-day moving average, simple moving average, and closed a little bit above it at 67. And so to me, the black line, by the way, since nobody's answering, is the MC point of control starting at the end of October. That is the most valuable price. That is the most valuable price by volume since we got up into this range, and we got up into this range on October 25th. We started getting up into this range in this since October 25th. So that black line is really important. It's basically saying right here is the price in which all participants for the last 2.5 months have traded and accepted as a fair price, and therefore they traded a whole lot. So it's 83 and a quarter. 83 and a quarter. It's actually 78 and a half, and it keeps bobbing between 83 and a quarter and 78 and a half. But regardless, we came, tested that price, moved off of it, and now we're below it. We are giving up everything above the most traded price, and so there's quite a bit of weakness in that situation. The next price down is going to be the MC low volume node, and that just happens to be the 4650, and we broke through it. You can see that we're trading well below at 35 points. We're 15 points below, so any push into the 50 is likely to see a reaction as resistance. And if it does see a reaction as resistance, in other words, if we open today and we cannot take this 50 and push back towards 83, what is likely to happen next? All of you who bought my charity webinars 13 years ago, and all of you at Convergent who do study halls and talk about this stuff all day long, please answer this correctly. What happens if we cannot take the MCLVN at 4650? What happens then? Is the video super delayed, or are you all still sleepy this morning? What's likely to happen is to move to the next high volume node. Where's the next high volume node? It's right down here at 4612. That becomes the target. So the ideal trade, the big trade of the day today, is to have a response, open in a gap, have the market respond, attempt to push through the 4650, maybe get to 55. Remember the low of Friday, 55, 53.75. But if it doesn't, if it kind of fights the 50 to 55 zone and it's not able to get through it and it starts to roll over, then the trade becomes, and again, trade your plan, but the big trade becomes a short in the 50 to 55 range, targeting 12, because the next most accepted price in the area is this 12 down here, and that becomes the equilibrium point. The 12, you can see, comes from way back here. Sorry that this camera stands in the way. Way back here, way back here. There's quite a bit of volume in this zone, and so that trade is about a 5-point stop with about a 40-point return. And on a swing basis. I don't expect it to get it done in a day, although it can get it done in a day. Settlements at 67 or 68, getting down to 46.12 is not that difficult. It's just 50 points away. On a selling day, that can be achieved quite rapidly, in fact. So that's the big idea here. That's the big idea today. If it gets above 46.50, and you can see that it's having a hard time pushing lower, like we saw the buyers having a hard time holding prices higher. It gets through the 50 and it starts to pull back to the 50 and just has no selling interest, then we are likely to push into what's the price. Lots of quizzes this morning. I know it's Monday and everybody's half asleep, but if it's not able to push down through the 50, once it takes it over, what is the next price that it's wanting to check? Next major price that it wants to check? Just looking at the auction balance, imbalance, you're looking at it going back to, thank you, Ro, thank you, Ryan, and so on. It's likely to push back to the 83 and a quarter. 83 and a quarter becomes the next stop on this train, where we reach balance, and then sellers might come in and scratch longs or take on more positions if their expectation is lower, and so on and so forth. And then once we clear, if we clear the 46.12, the next area down is going to be the high volume node, which is formed right down here at 46.50. So the map is kind of like these arrows that just go like this, and our job is to pay very particular attention to where we, in what phase we are, and what's being tested, and what's holding and what's not, and to take positions with defined risk for the next rotation. You got to understand the map. You got to understand the rotations. It's really important. So 45.50. If I said 46.50, I'm wrong. 45.50 is circled right here, becomes the next area. So 46.83 quarter to 46.50. Can't hold 46.50, which it didn't this morning. It did in the overnight session early, but it couldn't hold it this morning. If it opens up and it can't hold 46.50, then look for 46.11.12. If it cannot hold the 46.11.12 and it starts to push through, then you're looking at 45.50 as the next key attraction through the 4600. Which is a battle area, which is likely to be a strong battle area. Once it takes the 4600, you're looking at 4650. So we have pretty good ranges and good volatility to make money, in my opinion, in this kind of market. Let's get past this. Friday, I'm not going to spend too much time on the review. Here's the chart for Friday. Really nice open auction here, skews down, turns back up, and we have a nice blast to the top side, and then we get this continuation. So we have an impulse pullback continuation trade, puts in the IB, comes back. What does it do? It pulls right back to the MC point, to the composite, to the full session and RTH VWAP, full session and RTH mid, all in that area, and the open at 87 becomes an ideal short position, aiming to break the IB high or the IB low with a historical probability of about 97%. And so that is a very, very clear technical setup right there. This is a statistical and an auction-based setup. Pull back to the mid and boom, blast right through, and then the next target becomes the prior day's low at 62, and the key target becomes the key low volume node at 55, 46.55. Where does it go? It goes 5 ticks through, puts in a higher low by a tick, and it starts its trip back. And so now we're looking at the IB. If the IB doesn't hold from as resistance, then the IB is likely to hold as support, and it did. It kind of squeezed through here, and then for the rest of the session, it was just dead quiet. So that's where we are. Delta was negative on Friday. Sell aggressors were more active than buy aggressors. And here's what we've done since the reopen. We opened a splash down into 50, 46, 50 to the tick, come all the way back to 81.75, pull back to 55, the Friday's low, push back up to 75, and then it just broke lower, and we are well ahead of the full session VWAP in mid, and the point of control shifted from 46.73, something like that, all the way down to 46.39. So the market's moving balanced to the downside in the overnight session. So this morning, pay very particular attention to how the market responds to this area, and how does it become responsive? Does it push higher right off the get-go, right off the open? That's going to be very indicative of who's in charge, and will set up opportunities both short and long. If we become responsive and start filling the gap, then great. We're looking for, again, 46.50 resistance, 46.55 resistance or targets for the longs, or areas to lean against for shorts, and then work with whatever it is you use, order flow or whatever. So here's what's expected this morning. We're still in balance. We're still inside of that big range from October 25th, like I showed you in that composite chart. And so the expectation is an open auction in this chop zone right here, an open auction. I'm looking for this thing to be responsive back towards 46.50, 46.50 first. See this large ledge? So this is the 50 right here, 50, and hang on, 55, 50. All right. So open auction, looking for this to have a reaction, potentially 55 to have a reaction, and I'm looking for it to spill over and extend the overnight stats. So the overnight stats all the way up at 81.75. It's much more likely to catch the overnight stat at 31.25, take it down, and then start moving towards 46.12, right? 46.10, 46.12, something like that for the bounce. Or very easily, it can pull back to this and continue lower. That's still scenario one. That's still scenario one into the century figure at the double O. The double O here. That's still scenario one. Scenario two is gap responsive. In other words, the market finds that prices have dropped unreasonably, and they create an opportunity to buy, push the overnight low immediately. It's pushing the overnight low right now as we speak. Push the overnight low immediately to a point where it finds support. Then we get an impulse. In this case, we're looking for an impulse higher. Strong movement in this environment. An impulse is about 12 to 13 points in one sweep, one push, with minor pullbacks. Come back to the overnight point of control, and then start working itself into the 50. Fight the 50 here. Fight the 50, and then finally get into the 55. Use the 50 for support to come back and give us the prior settle stat, and it comes back into balance with Friday, and that really sets the buyers up to squeeze over the next couple of days if they have reason to. If these yields continue to drop like they've been doing, then they're going to have a hard time squeezing higher. Look at how we've done since the beginning of January. Everything is leaving the VWAP behind. Look at the trend in the bonds, and look at the trend in the 10 years. This is a relatively bearish environment. This is likely to continue to be bearish. I'm expecting us at 46.12. If not in this session, then the next, and we may see 45.50 over the next few days unless things turn around. Just not seeing a reason for things to turn at the moment. So you've got the full picture. Monday's show is always long, so plan on it. It's 25 minutes in general because we're catching up on everything that's happened last week and setting up the week. Make sure you have a good reason to be trading. And I hope to see you tomorrow. And I hope you're here and are controlling your risks so you can continue to participate in this just fantastic thing called trading. Take care.